Hello, everyone. It's Thursday once again. You know what that means. It means we're going to talk about robots, talk about trading, talk about your life. Well, we may talk about your life, or we may not. If you want to share something with me, I'd love to spend 20 or 30 minutes talking about your problems because I don't know if you know this about me, but I can solve your problems. 22 years of dealing with teenagers and parents, I consider myself a world-renowned expert on your problems. Just so you know, I've heard a couple. Let's just say that. I've heard a couple people with a couple problems. But that's not why we're here. We're here to talk about, actually, we're going to talk about the free trading system, of course. Free. But we're also going to continue our discussion on 100% trading. But before we do that, everyone, I need to talk to you about something. That's not it. Actually, that is it. Never mind. This is what I want to talk to you about. This is the dollar yen robot that I built. I get no credit for that. I just used the turtle philosophy and built something. It's not exactly the turtles as we've talked about, but I built it. Built it on a daily chart, talked about it in the blogs, talked about it last week, talk about it all the time. Okay. This is a trend following robot. And I'm going to be talking more about trend following because I've made the argument it's the greatest trading system that's ever existed ever. And I have data. I don't just say that on opinion. But what do we talk about in these webinars and on the blog posts? We talk about do what you like. I can't even believe how important that is. I can't even believe the progress that's made from athletes when they decided what they like. I can't even believe how much people improve their trading when they decide what they like. And I can't believe the effect it's had on my life when I just stopped screwing around and done what I like. Okay. So then that begs the question, well, what do you like? Most people don't know. Isn't that sad and scary or scary? But isn't that weird how most people don't know? Please find out what you like. And I'm going to give you something to potentially like right now before we get into it. Here is a robot. It's a breakout robot. Like I said, it's based on the turtles. Now, as you know, the dollar yen went through a little bit of craziness. Oh, let's check the date. November 9th. Do you know what day that is in the U.S.? That's right around election time. And of course, when the election went in the way that it did, people expect everything to tank, dogs and cats living together. It's supposed to be utter chaos. And instead, it was very, very good for the stock market. Again, if you're long, not good if you're short. But it went the opposite direction of what most smart people said. I said nothing because I'm not smart when it comes to predicting fundamentals. I'm not smart at all about fundamentals. So I just stood by. But you can see that during this election time, it broke out and then immediately stopped out. Oh, that stinks. But of course, when you're a trend follower, you have small stop outs and big gains, right? Your gains pay for your losses, okay? And this is relevant actually to what we'll talk about later. But I just wanted to talk to you about this. Okay, then it broke out. This has been a non-stop climb upward, pretty much. There's a little stop, and then a reclimb, and then a stall. Okay, this robot is in this trade, and it just keeps getting more profitable, more profitable, more profitable. It's got a trailing stop, so this guy is just trailing behind. This particular robot has no other stop. It'll get out when it retraces. If it goes up forever, guess what? You're a trillionaire. Otherwise, when it retraces and the trend is over, it gets out. I'm just telling you, I like day trading. How many times do I have to tell you that? But I'm going to tell you something different. I am not trading real money with this. I have traded my these robots with live money, and I'm going to again, but I'm just not right now. When I did my focus portfolios, I scratched this momentarily, temporarily. So I have no money in this fight, okay? I do have lifetime members that are in this or have gotten out of it by now, I believe. They've told me so. But I have loved this. How many days is this? 1, 2, 3. It's what? It's November 9th to December 8th. So it's been almost a month. I have absolutely loved this. I get up every day, and the second chart I put up is my trend following. My second workspace I put up is my trend following. I've been watching this. And every day it goes up without retracement. This little trailing stop goes higher. I love that. Now, would you hate that because it's 30 days old? Would you say, I needed to get out? I don't want to lose all this profit. And I've had people email me saying that when they're talking about trend following. Well, I want to get out, or they just get out. Are you patient enough to do something like this and wait for it to stop out? Because I've just enjoyed this thoroughly. Okay. Anyway, think about that. You don't have to answer me right now. Let's get back to the discussion. what are our goals today? Our goals today are to use an actual trading system to get a little more familiar with what 100% style trading looks like and acts like. I want to be able to say in these webinars, on my YouTube channel, whatever, I want to be able to say 100% style trading and people get it. I worry about if I say 100% style trading, people say, well, what's that? And I say, does that mean you win every trade? No, clearly you don't win every trade. You win every series of trades. So hopefully I can brainwash you enough where everybody knows what 100% style means. So we're going to use a system to do about that. But when you use 100% style, guess what? It will probably work no matter what. Well, does that mean I can just get in the market and do whatever I want? Well, the short answer is yes. With a 100% style system, you could randomly enter and make money. I think we've said that before. But you will run into drawdown, and you probably won't do great long term. It would be tough. That would be another discussion. So instead of just entering randomly, there are a couple of major schools of thought to get into the market and then trade in this 100% style. We're going to talk about one today. So when you choose one or the other, how does that philosophy change the way it trades? Well, that's what we're going to talk about. And well, once again, while we talk about this, talk about the good and bad of 100% style trading. Again, I know it's not the first time, but I cannot let you trade this way until you're fully educated on why it's good and why it's bad. I don't want you to be a passerby and say, oh, 100% sounds good, I'm in. I don't want you to do that. If you're currently doing that, maybe stop or at least educate yourself. You need to know why it's good and you need to know why it's dangerous. So again, we're going to talk about that. Okay, here's a very, capital varies. Good writers don't use the word very. I did. Good writers don't capitalize. I did. Why? Because it's so important that you know that this is simple. This is almost random. I mean, it's so simple. So if you came expecting a complex trading system, know two things. One, simple is better. It was a cliche, and several years ago, I thought that was garbage. Someone said that, and I said, that's an idiot. If simple worked, everyone would do it. Guess what? Simple works better. I like my systems simpler rather than more complex. So I wanted to do that in the webinar. And second of all, I want you to see how simple actually works just fine. Is that the same thing said in a different way? Maybe. But it's very simple, and I wanted you to be able to follow along. So there's another reason. Okay, here's the philosophy. You ready? When price breaks out of a range, what's going on? Well, something happened, right? If it's going along in a very narrow range and it's not going up, it's not going down, it's going sideways. When something happens, there is a catalyst. On that chart we looked at, remember what happened? It was the U.S. election. That was a catalyst, right? Look at all that profit if you're long. When something breaks out, something else is going on. Makes sense, right? If you go into a restaurant and there's 4 people there, and an hour later, 400 people are there, something just happened, right? Maybe it's Vegas fight night. I don't know. When price breaks out of a range, surely it's going to continue in that direction. I mean, that makes sense. It broke out. It's not going sideways anymore. Something's going on. We can profit from that. We can take a profit in that direction. We have our catalyst. It's time, and we can profit. That makes sense, doesn't it? You get in while the iron is hot, and then you iron your clothes. No, then you take the trade, and you make your profit. Now, what's the downside of this philosophy? Well, when it breaks out, everybody's watching, right? Most people are aware of breakouts. Most people who have done the trading themselves or are doing the trading themselves are people who make robots to do the trading for them. Almost always people are paying attention to breakouts. Most news, CNBC stuff that I've seen is talking about something breaking out one way or another. Okay, when a lot of people are watching it, that breakout, crazy stuff happens, right? If there's a lot of people break out, well, that's stupid, I'm going to sell it. Well, that's great, I'm going to buy it. Well, that's stupid, I'm going to sell it. And you get some hesitation. And if you get some hesitation on the actual breakout, what do? It's something that you need to consider. For example, many times, and I've actually seen these articles and researched them, people have talked about the death of trend following. When trend following is flat or down for the year, people say trend following no longer works. And then, of course, the very next year it works, right? It works, and it works huge. But because people watch breakouts, because trend following makes such simple sense, there are a lot of shenanigans right around the breakouts. Now, I personally don't get it. Well, what don't I get? Let me tell you. All right. You know that most of the big institutions, let's say we don't know for sure. Let's say most of the big institutions know they get in. When price breaks above its previous 20 bars, people get in. Okay? We know that. So, okay, I know that someone's going long on the breakout. You with me? I know that because I'm so smart. Why would I want to short that? Pause for dramatic effect. That doesn't make sense to me. But that's why people say that trend following dies, is because everybody knows when the breakout's coming, and so they fade it. Why does that make sense? If I know it's going to break out, wouldn't I buy it? Anyway, it's just a little rant of why I don't get why price hesitates at breakouts. I can see why people are indecisive, saying, is it a real breakout? Is it not? No, I can see that. But people who try to fade breakouts, I don't get it. Maybe they just fade you into your stop. I guess I can see that. But anyway, that's just a little rant. Okay. To get around all this little discussion, or not get dinged by haters, little colloquial language, don't use a stop loss and go for the target. So we have a philosophy. When price breaks out, something's going to happen. We won't use a stop loss so we can get our profit. Does that make sense? Hopefully it does. This differs, however, from fair value trading, Warren Buffett trading, value investing. Fair value and value investing are the same. What you do is you see the fair value of whatever. If price drops below that for long trades, opposite for short trades, we're just talking about long. But if a stock is worth 100 and it drops to 50, it's beneath its fair value, right? I'm buying it on sale. If a car normally sells for $50,000 and I get it for $25,000, I'm getting it on sale. You're not buying something on sale if you're doing a breakout. Do you see the difference? Value investing, fair value investing, gets it on sale. Breakout does not. You're getting it when it's hot. You're getting it almost at its highest point sometimes. Okay? Do you see the difference? Huge difference. It's the difference from waiting for the revert to the mean, right? There's one universal truth, and that is things revert to the mean. Well, this isn't doing that, right? This is going for the breakout. This is going when the stove is burning, not waiting for a reversion. Got it? So how does that work out in our trading? Okay. Well, if you don't win right away, right as the euphoria is happening, the market can violently change its mind. Or maybe you're trading at exactly the moment. Remember, although it doesn't quite make sense to me, I mean, it kind of does, that people start fading breakouts, or people have had enough when things break out. I can see that it's happening near a top maybe, and then people want to fade it. That I get. But a general breakout fading, I don't get. Anyway, if you don't get your profit right as the euphoria breaks out, the market can violently change its mind, right? What's an example? Have you ever been in a fight with someone that you care about? Has I hate you in that argument ever turned to I love you, or opposite? I love you, I hate you, right? Stuff happens. And guess what? Trading is very emotional. I think relationships and trading are very similar in some respects. And what can happen is, if the market does change its mind on a breakout, now the trend is the other way. Do you see that? When you don't buy it on sale, long trade, there's nowhere for it to rise. You bought it at the top, potentially, and maybe that's near the time the trend is over. And now the trend is the other way. You can't revert to the mean, obviously, because now the trend is gone, right? You're in at the high. You're not in at the low. So if you get a market switch, guess what? The drawdowns can be bigger and longer than if you use fair value reversion. So if you want to do a 100% system on breakouts, guess what? That hot trade that you get into is going to work out a lot. But the difference between waiting for a reversion is that fair value has somewhere to go. it's going to revert to the mean eventually. This one, you're just going to have to wait out till that trend violently reverses again in your favor. I hope I explained that well. It's clear in my head, but it doesn't matter what I know. It only matters what you know. The difference in philosophy is this. If you buy on sale, it has a place to rise. If you buy it at the top and it reverses, you can be in that drawdown for a while. Hope that makes sense. Okay. So let's look at the system. This is a US dollar, USD, JPY daily chart. I like the dollar yen. I just do. I don't know why. I just do. I don't have a great reason. We'll talk about right now only the long breakout price. So we're going to take a long trade on a daily chart above a price channel or above the high of the previous 20 bars, set to 20. As we mentioned, we're not going to use stop losses. We're going to target 60 bucks. Just 60, nice even number. Could be less than that. Could be a little bit more. I did 60. I tested it, and 60 is nice, kind of in the middle. The trade size I use for this example is 0.1 lots, and I will get out of trouble a maximum of 4 other times for a total of 5 positions. 5 positions, 4 get out of trouble. And let's take a look at some trade examples and some results. Alrighty, there it is. Okay, this goes back to, let's see when this is on my lovely TradeStation charts. This was back in 2009, and I'm showing you this for a reason. There are current trades too we could look at. All right. You can see I use this TradeStation indicator for a price channel, and all I'm looking for is to count back 20 bars, 1, 2, 3, 4, 5, 6, and the highest of the previous 20 bars, if it goes higher than the high of the previous 20 bars, we get in. Something changed, and the market's hot, and we get in, and we go for 60 bucks. There's the high, right? It's shown here by the price channel. As soon as it breaks above, market's hot, and we get out at a profit. Okay, got it? Excellent. Here's another one. There's your price channel, high of the previous 20 bars, right? Broke above that, took a little profit. Here is a little get out of trouble. The thing about this particular style of trading is that if it breaks out above a previous high and you get your target and it keeps going, you're going to get more and more trades, right? It's going to continue to break that 20-period high. Every successive bar is higher than the previous 20. So you get a lot of trades back to back. It's important to know that. So there's a breakout and a finish. These two broke out, but look, it didn't go anywhere. It immediately reversed. Remember we talked about, I hate you, right? So now it hates you. You can see we didn't buy it down here on sale and let it rise back up. We bought at the top, right? And if we didn't see this on our chart, right, we're buying at potentially the high, right? And then it fell down, but eventually the trend reversed again a few months later, and we broke out again, took another position, and it all finished out for profit. These aren't profitable, this is, but it all ended up in profit, and another breakout profit, another breakout profit. Okay, got it? Pretty easy, right? Well, let's check out the problem area, right? There's a few more breakout. Oh, went violently reversed, okay? Here's a bunch of breakouts that all worked. Another breakout that all worked. And then right here, it's hard to see, but you took a trade, and it finished out. It took another trade right on this bar. You can see the 10,000 here is one mini lot, and it took an extra trade. So it took right at the high, and this is what we're talking about, everybody. Look at this. Bye, bye, bye. All right. Now, this is a daily chart. So that's May, June, July, August, September. Ooh, right? We bought literally at the high. Isn't that interesting? That's what this type of trading does. But we don't have a stop loss, so there it goes. Now, this is a pretty serious downtrend, and it got in again. Nothing really happened. And then it got in again. And then it went against us again. So now we got 3 positions. Oh, my goodness. This trend is going the wrong way. Then it got in again, and got in again. There's our 5 trades. At that point, what do? Nothing. We're stuck. And the months just roll by. See what I'm saying? That's the difference in trading with this sort of philosophy, right? This is the absolute low, right? 2011, we got into the trade way back in what, 2010? Right? We were getting into trades back in 2010. So we've been in this for a year. You've been getting up and looking at your trading account. That stinks. This is the low. That's the worst it ever got. And then the trend switched. Oh, when it starts rising, and we're getting excited? Are you feeling the palpitation? And there it goes, right? We didn't take any more trades here, obviously, because we're all maxed out. And then it all got out at a profit 2 years later. And then look at the series of trades. The trend was savage, and look at that win, 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 win. Okay, what do the numbers look like? Well, let's take a little look. I did it on a sample $10,000 account. We'll talk about that in a second. So it made that. I mean, this has been a long period of time, so it's not the most money in the world, right? But it's money in your pocket. You get a lot of good rollover credit, though. By going long on the dollar yen, you get paid to be in a trade, like having dividends. So that's pretty good. That's like 12% on top of our money. 12% of our total profit just gets by hanging on, just being in these trades and hanging around. That's kind of cool. And again, this is an estimation. It's not exact, of course. There's our max drawdown, though. So when we hit that low that I showed you, the worst it ever got with all those positions is $6,991. I think you could trade that on a $10,000 account, but you might be getting a little nervous, right, to see $69.91 drawdown on a $10,000 account. I think it's doable. I think we could make it, especially if we have other things going on in our trading. So anyway, I use a $10,000 account. You could use a $7,000 account if you're really bold, and hopefully that you make money in your account before that happens, right? But I just said, you can see I just said 10,000. And also, the maximum consecutive winning trades is 34. So trading this style makes sense philosophically, right? You can win at 1.34 trades in a row. It doesn't do a lot of losing. See what I'm saying? And only 3 losers in a row. What does that look like on a graph? Well, that's left to right in a 45-degree angle, the type of angle that trading educators and smart people on TV tell you it can't happen. Well, of course it can happen, right? There it is, right? So, and then is there anything else I need to show you? There's the yearly tab. Now, what's interesting about this is you can see that 2-year period, right? We didn't make any money, but it didn't take a loss out of our account. It just drew down. And you can see you made 50% or 55% in your account the very next year when you added all this up. So yes, you would have had 2 years of nothing, but then you would have gotten it all back. So you didn't actually take any losses. That's the cool thing about 100% trading. You don't take those losses. You just have to survive them. If you survive them, you never take a loss. If you survive, all right? So those are the stats. Moving on. Commentary on such a system. Well, it's a decent amount of profit, not great, but if you don't need to withdraw, right, and you just want something to grow your money, for sure that will grow your money. As I said, you probably couldn't use less than a 10K account because of the drawdown. But like I said, the drawdown is different in that it's not debited or credited. Which one is it? It's not taken out of your account. It's just a drawdown that you would have to look at. It hits, and one thing weird about this system is that it hits the profit target exactly when you rebuy. But this is just a TradeStation quirk. I didn't build this on purpose. So when you get into trouble, it will take exactly $60. But if you get it on the very first trade, it doesn't take it out to the next day. Can I show you that real quick? So this is cool, and I could build this in if I wanted to later, right? Oops. Let's show the very first trade I showed. For example, this one, you can see this is not a $60 win. It broke out, and it stayed profitable. This particular robot did not take it out at $60. It waited for the day to close and then got out at the open. Pretty cool, huh? So sometimes you don't get $60. If you get it all in one bar, you get more than that. So that's kind of a cool feature. I didn't build that in. That was an accident, but a happy accident. But that's TradeStation rule, which is, I think, maybe a good one. And everything wins except that period in 2010. That's pretty cool. And of course, then we bought a breakout with a different change of mind. We bought at the high. We showed that. Think about that. From 5/5/2010 to 12/28/2012. You got out of it in profit, but you would have had to wait that long. All right? And then I showed you the low point. Now, fair value robots tend to not do that as long. Why? Because you're already buying it on sale. It's gotten to a very bad point if you wait long enough. So it doesn't usually fall anymore. And furthermore, the currency pair wants to go up probably if you've waited long enough. Everything in the universe wants to revert to the mean. So it wants to go up. It wants to get back to normal. So that's why the drawdowns tend not to last as long, right? Which is why I like fair value a little better, but you may not. You also don't get the winning streaks, at least in the research that I've shown. I mean, you get good winning streaks, don't get me wrong. But trading a hot market, you tend to get winning streaks. Make sense? So what are some solutions if you wanted to take that and start messing around with it and testing it out? Well, you could use more than one robot in the same direction, right? So not everything's going to buy at the top, especially if you use different currency pairs. And you would only trade that same direction so you can keep the rollover coming into your pocket, right? You trade in the direction that you get paid to do. That's definitely a possible solution to just waiting around for 2 years for one robot, right? More can be better when you're trading 100% style. More kind of bothers me when you're trading and day trading, right? Don't add as many positions, right? I got in 4 extra times. Maybe you should get in only 1 extra time, right? Maybe. That would not, though, help your drawdown length, but it would lower your drawdown, right? The less you get back in, the less the drawdown. But it also takes longer to get out of trouble. Or you could trade in an opposite direction in a separate account. This type of robot wouldn't work great if you went long and short in the same account. Plus, it's just good to separate your money. So what if we traded the exact same type of style, different settings, and slightly different settings for the short, different breakout, different profit target, but very similar. But what if you traded in the opposite direction, right? Let me move this out of the way. Excuse me, sir. Thank you very much. Here's the short version, right? And you can see that, remember, it was 2010 to 2012. Well, if you had this particular robot, same daily, same dollar yen, but in a different account, you can see that 2010, 2011, 2012, this didn't get into any trouble, right? There's your graph. This was making money. So if you had this robot in a separate account, you would lose rollover, right? So this would, you get charged money to be in these trades, but you would allow you to keep trading while you're waiting. And that might make it a little bit more palatable, right? And as I said here, you'd be making money in the other account while waiting on the drawdown. So that's something to consider. Maybe just go both ways, right? But in short, to sum it all up, 100% style trading makes profits on all sorts of philosophies, right? It works. It's how to make profit right away. The key, as always, is to not lose your whole account by controlling the drawdown. And you can't control it, but I mean having good data, good research to give you the confidence to know when something is up and how bad it can be. If you know how bad it can be, if it gets to that point, you know that you need to take some drastic measures, or just be patient. Things are going to get better, right? And like I said, the fair value is, the drawdown is a lot less, but there are some disadvantages to fair value. But in this particular circumstance, I like anything that has less drawdown. That's just my personal opinion. Okay, let's go back before I update, see if anybody has any questions real quick, and then we'll wrap it up for the day. Oh no, another name. Milika or Milika? I want to say Milika because of Ilima. Good morning, and good morning to you. How many robots are in the trend following portfolio? Douglas says. Right now, I think I tested 5 on the 240 minute. I like the daily ones better, and I've talked about that in live seminars with Rob, and I've talked about that in blog posts. Right now, I'm recommending euro and dollar yen. Pound dollar is now making its way to the arena, so I'll probably be having that, and I'm going to test a few more. All right, Elima says, I don't think I can wait 2 years in a drawdown. Exactly, and we're just, right, we're not selling you anything. We're just talking here. I want you to analyze what it is that you like to do. So waiting 2 years in a drawdown, guess what, Elima? I couldn't do it either, but I wanted to show you that 100% makes money, but that's the price you have to pay. All right, I think those are all the questions for now. Let's update it and wrap it up for the day. I am absolutely working on the course. It's not easy to work on the course when you're driving from South Carolina down to Florida. In fact, it's darn near impossible. But the organizing is all done. I'm getting a lot of emails, people who are ready for it. So I have, December 31st is my deadline. Hopefully before that. Today's December 8th. If I get some time to record, it'll happen pretty darn fast. I've got all the research, all the data, all the spreadsheet. That's all done. I've got the course outlined, ready to go. I just need to do the recordings, and I like to take my time and do those and make sure they're nice and clear. So there's your update on the course. I do have a new robot. I think I neglected to mention that. It's based on the first course I ever did, the How to Make 50% course. It's on my listing. I talked about 3 trading systems that you can use in that particular course, and this is an updated robot from that course. It's kind of interesting. What's interesting about it is this MT4 version is way better than the TradeStation version I built years ago. I mean, it's not close. I mean, it's 100 times better than my TradeStation robot, and I haven't had that happen yet. So anyway, I'll be sharing about that. I reached the 500 mark and went over that. Thank you. I'm really excited about YouTube. I want everyone to be able to get the information, like I said, as simply and easily as possible. So subscribe to my YouTube channel to keep abreast of all the information. I'm over 500. I think that's awesome. I'm very flattered and humbled and excited about that. Here is the contact information. That's the email. Best way to reach me is by email. I'll get back to you in 24 hours. Lifetime members, sometimes you get emails back much, much, much quicker than that. And there's Justin if you need to open an account, and you can go and take a look at that particular course and other courses. All right, everyone, that's it for this Thursday. We'll be back next week with more stuff to talk about. I can't wait to see you all then. Let's say John. Oh, thanks. All right, John, I didn't see you earlier. Thank you, John, for being here. All right, see you later, everybody. Bye for now.